What is going on in the Edmonton housing market in January 2023? Well, that is what we're going to cover in this video. I'll be looking at all the different market segments, including the market as a whole, detached homes, half duplexes, semi-detached, townhouses, and apartment condos. For each of these, we'll be looking at everything from the balance of the market. You know, is it a buyer's market? Is it balanced? Is it a seller's market? We'll also be looking at inventory levels for each of these, what's going on with the sales, average prices, benchmark prices, and also how those prices have changed over time in the last 5 to 10 years. So you'll definitely want to tune in if you want to get the most up-to-date information on the Edmonton housing market. Let's jump right in. All right, let's look at the market as a whole. So if we look at the market as a whole, we were sitting at an absorption rate of 27.6%, which is pretty close to pushing us into a balanced market. We're still technically in a buyer's market, but it's a pretty weak buyer's market, and your experience will vary depending on what price range you're looking at, what neighborhoods you're looking at, and even like the age of the home and how dated it is and stuff like that. All of that is going to create a bunch of mini markets, but the whole market, if we're looking at the most general term, is just on the cusp between a buyer's market and a balanced market. So that's been relatively steady, a little bit of ups and downs. Like we're looking at December stats, so it is down a little bit from November. We're well into January now, and I'm sure that's continued to shift. So by the time you're watching this, I wouldn't be surprised if we're potentially entering a balanced market now as a whole. Average price for the whole market was sitting at $372,589. Active listings at the end of December, we were sitting at 3,210, while there had been 888 sales in the month of December. So active listings were down 16.8% from November. They were still down from last year, down 12.63% from last year. And the sales were down 24.81% from November, but up 27.77% from December. So it's pretty normal for December to be one of the slowest months of the year, if not the slowest. So there's no surprise really that the sales were down from November to December. The number to pay attention to in my mind is actually that the sales are still up year over year. 2023 was a stronger year generally than 2022 in a lot of cases. Solid sales. Average days on market was sitting at 51 days versus 45 days in November and 60 days last December. In terms of the market distribution, you had just under 20% under 200,000, 17.3% between 2 and 300,000, 24% or just over between 3 and 400,000, and 18.5% between 4 and 500,000. Then there's just over 10% between 5 and 600K, and just under 5% between 6 and 700K, and then 2% between 7 and 800K, and just over 1% between 8 and 900K. After that, there's 1% between 1 million and 1.5 million, and it's quite minuscule after that. So that's it for the total residential market. Now, since we've been looking at the market as a whole, I thought we would look at the composite benchmark price and how that's been moving over the last 10 years. So if you look here, if we go back to the beginning of the 10 years, in December 2013, the composite benchmark price was sitting at 329,600. And as of December 2023, we're sitting at 369,000. The peak we had was in April 2022 when it reached 408,000. And you can see that we're at relatively similar pricing to where we were sitting in December 2021 when the benchmark price was sitting at 367,300. So, we're less than a couple thousand off from the December 2021 prices. We had that big run up in 2022 and then a bit of a correction. Made some gains last year. Trickled down kind of in the fall and the winter, which is pretty normal seasonal changes. And as we get into the early spring market and going into February, I wouldn't be surprised if we start to see these numbers creep up again. I'll continue with the next market segment shortly, but I want to give you an opportunity to let you know how I can help you if you're buying or selling a home in the Edmonton area. If you'd like to request more information about my services, feel free to reach out to me at 780-819-5508 or email me at trevor@trevortardif.com. Or if you'd like to jump straight into a free consultation call, ask me anything you want about buying or selling real estate in Edmonton, whether it's for yourself, investment property, for someone else. I have no problem talking to you. You can go to booktrevornow.com. You can select a time on my calendar, and then we'll do a 30-minute free consultation call. All right, let's continue. And now looking at the detached home market, very popular segment. A lot of people looking in this market. In December, we were sitting at a 25.64% absorption rate. So pretty similar to the market as a whole, just slightly lower. It did drop from November. In November, we were at 29.9. So we were right on the cusp in November, and it did fall back a bit in December. I'm not worried about that because that's pretty seasonal. Average price was sitting at $485,313. Now the number of active listings was sitting at 1,829 at the end of December, and there had been 469 sales. So actives were down 12.2% from November and down just over 26% from December of last year. And the sales were down 24.8% from November, but up 28.85% from December 2022. So again, similar story. Inventory is a little bit lower. The sales are seasonally down, which is normal, but they're up from this time of last year. Average days on market was sitting at 52 days versus 45 days last month and 56 days in December of 2022. And in terms of market distribution, you got 1.7% under 200,000, 9.3% between 2 and 300K, almost 26% between 3 and 400K, and the biggest segment at 27.8% between 4 and 500K. Then a bit of a drop there down to 17.4% between 5 and 600K and 18.5% between 6 and 700K. So as you can see, once you get over 600K, you're in a much smaller market segment. There's not nearly as many transactions happening at that price point. That means there's less buyers. Between 7 and 800K, there's 3.7% of the market and just over 2% between 800 and 900 and just over 1% between 900 and million. Since we're looking at detached homes, I always like to focus on the benchmark price because if you're actually wanting to track how values change over time, the MLS Home Price Index benchmark price is the best data that we have access to. It uses repeat sales for the same properties. They do have a benchmark description, so we're going to be looking at both 2-story and 1-story detached homes and how those benchmark prices have performed over time. They both basically follow the same trend. Like if you really zoomed in, you would see some small differences. So I guess the main takeaway there would be in terms of 1-story versus 2-story, there's not a real big story there. The 2-story homes on average are more expensive, but they're also usually bigger. A lot of the 1-story stock in Edmonton is still older bungalows, which tend to be smaller and therefore cheaper properties, but they both follow the same trend. We're just looking at the last 10 years here. So you can see with 2-story single family homes in December 2023, we're sitting at a benchmark price of $483,300. Same story as what happened with the composite price for the whole market, where we peaked in April of last year at $530,600. We're again pretty close to January 2022 pricing. So 1 month difference compared to the last one, but we're within a few $100s of the benchmark price of January 2022. And if you look back 10 years, the benchmark price was sitting at $434,700 for 2-story homes. Again, same trend for the 1-story homes. The benchmark price was sitting at $377,500, peaked in May 2022 at $407,500, and we're pretty close to January 2022 pricing. December 2013, 10 years ago, we were sitting at a benchmark price of $344,100. I guess this would be a good time to point out what's happened in the Edmonton market in the last 10 years. As you can see, that's a pretty sideways squiggly line with a few dips, a few upward swings, but generally it's not up and to the right like what some people might have been used to seeing in some other markets in the last 10 years. So there's a couple pieces of, I don't know if I'd call it advice or just insights that I would share about that. If you're betting on the Edmonton real estate market skyrocketing, if you look just at the last 10 years, the evidence of that happening don't look very good. If we went back further than 10 years and you look at the 2005, 6, 7 period, Edmonton did skyrocket, but then it's been pretty jaggedy sideways since then. I will have another video where I talk about like expectations and forecasts for the year. We had our Realtors Association of Edmonton housing forecast just last week, so I'll do a video about that and maybe go in a bit more depth. Most of the people were pretty optimistic about the Edmonton market this year, and one of the people from the Canadian Real Estate Association or Canadian Realtors Association felt Edmonton still had a huge affordability advantage. And it seemed like he was hinting at the possibility that we could have a similar type of situation here that we did have in that, I think he said 2004, 5, 6, 7 market, which is where Edmonton really did ramp up. So I thought that was very interesting that he hinted at that. He definitely wasn't calling it or anything, but those are sort of the two camps. It is like, okay, there are a lot of people I talk to, they think maybe the Edmonton market, it's still really cheap and really affordable right now, and it's going to follow the other markets and, you know, shoot up and to the right. I think that's a possibility, but I also want to point out it's also a possibility that we could continue having a sideways jaggedy market like we have for the last 10 years. So I wouldn't, you know, bet the farm on that. Obviously, you can do your own research. There is some speculation that goes into that. If you're looking for a place to live in, I think that should be your primary criteria, is buying a home that you'd actually like to live in that fits your needs versus looking at it as a get rich quick scheme. If you're investing, of course, you can look at the upside potential of appreciation if Edmonton does play a little bit of catch up with some other markets, but I think you should be prioritizing going for strong cash flow and making sure the investment makes sense from those other ways of analyzing it, and potentially doing value add, stuff like that, and making money other ways rather than just based on the speculation that values will shoot up. So I know there's a little bit of offshoot there. Hope you guys got value out of that. Let's continue. All right, semi-detached housing. So this is basically going to include half duplexes, and I believe it should include residential attached. I still need to check with the board to see if they include residential attached in their semi-detached reporting, or if they push that over into row/townhouses. So we'll look at this and just assume it's mostly duplexes at this point. The market was sitting at a 35.58% absorption rate. So, you know, balanced market, but a weak balanced market, slightly more on the buyer's side, but still relatively balanced. So probably shouldn't be expecting any huge deals if you're a buyer. Average price for this type of property was sitting at $367,501. There was 267 of these active at the end of December, and there had been 95 sales. So the actives were down 10.4% from last month. Don't have the data from last year because they changed some stuff. And the solds were down 18.8% from November. Average days on market was sitting at 39, which was the exact same as it was in November. And the market distribution, you could see, again, barely any of it under 200,000. 19.5% between 200,000 and 300,000, and the biggest segment is between 300,000 and 400,000, with 43.4% of the market. And then the second biggest is at 25.7% between 400,000 and 500,000. Then you just barely are under 6% between 500,000 and 600K, and 2.27% between 600,000 and 700K. That's the probably mostly half duplex market. I'm not surprised to see that this is balanced. Part of that's just to do with how small that market is. Like if you compare these numbers in terms of number of active listings and sales compared to the detached market or the market as a whole, it's just a lot less inventory that you're dealing with. So in my mind, that actually makes this market a little bit more sensitive to shifts. If all of a sudden there's way more of these getting listed for some reason and the buyers, the number of buyers hasn't picked up, then it doesn't take that many more extra listings for the balance of the market to shift. And same thing in the reverse. If you're getting a lot more buyers, all of a sudden like, yeah, I want to get a half duplex, but the number of new listings hasn't, you know, grown to list to match that. It doesn't take long to push it into a seller's market pretty quickly. So there's my 2 cents on that one. Don't have benchmark pricing on this. Let's continue to the next section. All right, let's talk townhouses. The townhouse market is looking the strongest in terms of the balance, sitting at 42.02%. So right in the middle of a balanced market. That dropped a little bit from November, but it's been, you know, relatively stable. Average price was sitting at $259,581. There was 357 active listings at the end of December and 150 sales. So the active listings were down 18.12% from November, no data from last year, and the sales were down 24.62% from November, but up 37.6% from December. I don't totally trust that number, but that could be correct. It doesn't sound that far off. Average days on market was sitting at 48 versus 42 days in November. And the market distribution, you can see almost all of it's under 400K. You got 32.7 under 200K. You got 35.5 almost between 200 and 300K. That's the biggest segment. And then 27.7% between 300 and 400K. Relatively evenly spread out if you think about it, between under 200K all the way up to 400K. There is a range of options for townhouses. Typically the ones under 200K, I'm gonna warn you right now, they're gonna be old. You're not gonna be finding new townhouses built in the last 10 years under 200K unless they're like microscopic and really small, which is usually not the case. Most of the newer townhouses are gonna be 250 up. Again, like 250 for, and by newer, I'm talking like early 2000s. If you want something that's quite new or brand new, you end up pushing that 300 and up pretty dang quick, which probably is where that 27.7% of the market comes from. Either that or very large older ones. That's kind of how that market's spread out. If we look at the benchmark pricing for townhouses, this actually looks a little different than the other ones. The result is still pretty much the same, but the squigglies look a little different. You can see in December 2023, we're sitting at a benchmark price for townhouses of $231,600. We had a low in February of 2023 when it was at $212,000. The high for townhouses was in June 2022 at $248,000. And if we go back a whopping 10 years, in December 2013, we were sitting at $223,900. Benchmark pricing right now is within $8,000 of where it was in 10 years ago. So again, I would also consider that a pretty sideways market. So generally has followed the same trend as the rest of Edmonton in the last 10 years. All the comments I made earlier when you were looking at the benchmark prices for 1 and 2 story detached homes, I would also apply to this conversation. Let's keep going. Let's talk apartment condos. Apartment condos were sitting at an absorption rate of 17.58%, which still puts them in a pretty strong buyer's market, I would say. That's been mostly unchanged for a long period of time. If you look at the 13-month history, that's bounced up and down almost like every second month. It changes a little bit, but nothing huge or revolutionary. Average price for apartment condo is sitting at $168,952. Active listings, there was 990 at the end of December and 174 sales. So if you compare this to the townhouse segment and the semi-detached segment, you can see that it's bigger, certainly in terms of the number of listings with almost 1,000. Unfortunately, the sales don't quite keep up with the number of listings in apartment condos, and that's kind of what has contributed to it being a buyer's market in apartment condos for so long. Active inventory was down 6.52% from November and down almost 33% from December of last year, and the sales were down 30.7% from November, but they were up 14.47% from December 2022. They're doing a little bit better than they did last year. Not as strong of an improvement compared to the other market segments. Average days on market was sitting at 58 days versus 54 days last month and 84 days last December. So last December, the one before, was quite bad. And as you can see, the vast majority of this market is under 200K, with 68.15% under 200K and 23.83% between 2 and 300K. And then it's quite rare getting over that 300K mark. You're almost looking at what would be considered a luxury condo, probably a downtown apartment condo in a newer building, maybe one that's more than a 1-bedroom kind of thing. 5.61% between 3 and 400K and 1.27% between 4 and 500K. Now let's look at the home price index for apartment condos over the last 10 years. This one also looks a lot different, the most different out of all of them, for lack of a better way of explaining it. The benchmark price in December 2023 was sitting at $176,400. Our recent peak, if you could even call it that, was in June 2022 when it was $182,500. We're within about 5,000 or 6,000 from that right now. The highest number I can see in the last 10 years was in May 2015 when it was sitting at $218,900. But if you look back the full 10 years, December 2013, the benchmark price was $201,800. So a little painful if you've been owning your condo for the last 10 years, seeing that there's a little bit of sideways, but it's actually trending down into the right. Not like aggressively, like a slow, painful trickle down. And that's basically what's been happening in the condo market, for the apartment condos at least, for a long period of time in Edmonton. I don't think this is going to continue forever. A lot of people would argue that our apartment condos in Edmonton are quite cheap, especially if you compare it to other markets. It's kind of insane if you compare, like, 2-bedroom, 2-bath condo here to one in Toronto or Vancouver. You will find people out there that believe that apartment condos are poised to get a nice uptick in value once more people move out here. Like, we have a lot of people moving out here from Ontario and Vancouver, BC, and some of those people are buying apartment condos. like that's what everybody buys in their market. So that in some ways you could argue they might be a little bit more comfortable with that lifestyle. Whereas here, apartment condos have definitely been neglected for quite a while by most buyers. What am I trying to say? Some people believe that there will be an uptick in the number of buyers in this segment. And I think it's from a combination of interprovincial migration, people moving here, new immigrants that end up moving here could go into that category as well. And if the other categories become more unaffordable, which they have recently for a lot of people, even if the prices haven't gone crazy, just the fact that interest rates are higher does make some of those property types like detached homes less affordable for some people. And the theory goes that once those people get priced out of those markets, that they will move into apartment condos instead. Obviously, we've yet to see that in our market statistics here in Edmonton. I think it's a bit of a different story in Calgary. I know the Calgary market has been ripping pretty good the last 2 years, but that's something that could change. So if we have another repeat of the last 10 years and you bought a condo now, then that's going to suck. If you buy an apartment condo, because then, you know, it'd be worth less 5 or 10 years from now. But these trends typically can only continue for so long, and then something's got to change. So that's my 2 cents on that. For some people, that's the reason they want to buy an apartment condo, because they think it's really cheap and it can only go up from here. Whereas others, they look at what's been happening in recent history and they're afraid of that happening moving forward. Hope that was valuable. Let me know if you have questions about apartment condos. If you're buying or selling a home in the Edmonton area, feel free to reach out to me at 780-819-5508 or email me at trevor@trevortardif.com. Or if you'd like to jump straight into a free consultation call, you can go to booktrevornow.com. You can select a time on my calendar and then we'll do a 30-minute free consultation call.